Nat, $45 billion has been wiped off the value of Australian shares. The local market tumbled more than 2% yesterday in response to falls on world markets. The sell-off was accelerated by concerns of Trump's trade war with China and now a looming trade war in Europe as well. For more, I'm joined by Julia Lee, Portfolio Manager at Berman Invest. Julia, which stocks took the hardest hit yesterday?
Well, we saw red all across the board. Every single sector was trading lower, and having a look at the top 20 stocks on the Aussie share market, every single one was lower, and even in the top 50 stocks, only one stock managed to gain, and that was Newcrest Mining. So gold was a safe haven in a sea of red yesterday, but the worst hit sectors were those areas that are exposed to global growth. So the energy sector was down more than 3%, and the banks also took a big hit.
Okay, what's spooking the markets?
Well, at the moment, it's a tug of war between economic growth and central bank action. Fears around weak economic growth is really what drove the losses yesterday. But on the flip side, central banks' action and hopes that we're going to see lower interest rates, quantitative easing is helping to boost some hope. And if we have a look at the US stock market overnight, we saw a little bit of a bounce on hopes that next week when the US Federal Reserve meets, we will see a 25 basis point cut there. And the market's pricing in a more than 90% chance of a cut next week.
I hate October because I'm old enough to remember the 87 October crash, and it seems October is a terrible month for the share market. Should we be panicking?
You know, October is actually one of the best months for the Australian share market. But you're right, October is a month where we have seen a lot of volatility. You mentioned the 1987 stock market crash, but also last year, October, it was the worst month of the year for the Aussie share market. We lost 6.1%. And looking back to that October, it was gold which really outperformed. The gold subsector was up 7.6%, and the worst sectors were ones like energy, which are exposed to global growth.
Okay, so don't panic at the moment. All right.
Don't forget the market rallied 23% after December.
Yeah, absolutely right. Put it in perspective for us. Good on you, Juliet.
Thanks,
Here's
Joshi.
that.
Well, imagine